You're with us on Editor's Roundtable. So what has this 50% tariff on India meant for the market and what lies ahead? Let's take a look. Now, first of all, let's look at the 50% number itself. India has been handed out the highest tariffs in the world, next only to Brazil. And it's not as if we're running the highest trade surplus with the US. I mean, look at, that's why I put up this number. These are some of the trading partners of the US which are running very high trade surpluses. In fact, look at China, I mean, 296 billion. Vietnam is at 123. The trade deficit the US has with India is just $46 billion. Despite that, our tariff at 50% is obviously among the highest in the world. So that's point number one. Now let's move on and talk about what has happened, because geopolitics has become very, very interesting and very, very important. What has happened so far? In the last 24 hours, what we've heard is that Mr. Trump has said that there'll be no further negotiations with India till issues are resolved. He seems to be pointing out towards the Indian purchase of Russian oil. Number two, we know for a fact, with confirmation coming in from Mr. Doval, that the Russian president, Mr. Putin, he's going to be making his way to India. Very, very important development as well. Number three, we've seen a conversation, a phone conversation with the Brazilian president and Indian Prime Minister. And talks were apparently covering a whole range of issues, including, of course, tariffs. In fact, Mr. Lula is expected to make his way to India on a state visit in 2026. And number four, Prime Minister Modi himself is going to be traveling to China for the SCO summit. And this is assuming a lot of significance because in all probability, he will be holding a bilateral meeting with his Chinese counterpart. And this is the first meeting in many, many years. So the voice of the BRICS seems to be rising again. These overtures are very significant and important. Now, the market is in a wait-and-watch mode. It is waiting for a breakthrough. First of all, in that meeting between Donald Trump and Mr. Putin himself, because if that happens, then the market's hope is that at least that additional 25% tariff, that perhaps can be knocked off. But it's a if at this point in time. So what does this mean for the market? Let's look at some numbers. The Nifty is down about 1% this week. The mid-cap index has fallen about 1.5%. Now, what happens if all of India's exports get tariffed at 50%? Morgan Stanley has done an impact analysis, and they're saying is if everything is tariffed at 50%, then the impact on GDP growth is going to be 120 basis points. But if the exempt categories, such as pharmaceuticals and some electronics, if they continue to get those exemptions, then the impact on GDP growth is going to be lesser, only 80 basis points. Now, why is the market so worried if the GDP hit is only 80 basis points? Here, the answer comes in flows, and the picture on FPI, inflows and outflows is not looking very good. In July, we were out by almost 18,000 crores. So far in August, 12,400 crores. And so far in the calendar year overall, we've seen outflows of over 1 lakh crores so far. So that remains the biggest concern. Something highlighted by Novama in one of their notes. I'm just recapping that for your benefits. For instance, this one brokerage says that the capital flight is likely to weigh on the mid space, in particular small and mid caps, and that remains the biggest risk for the market. And Ravi, that's really my question to you. FPI outflows, is that a new risk? Ravi, yeah, that question to you. FPI outflows, I mean, we'd want to wish it away, saying domestic inflows will counter it, but could it still be a new risk the market has to look at?
No, clearly they have